Hi everyone, this is Brian Mako from the Rocky View Entrepreneur Series. Today I have George Craven with me from Monarch Tax Law. As you know, what I'm trying to do is get everyone to promote local and everyone within my client base to promote each other. And I want to introduce not only my own clients, but people that are an extension of my own practice. So, I can do tax, but I can't do tax law. So that's why I have people to refer out to, like George. So, I guess on that note, I'll just say welcome, George.
Hi.
So George, tell us about yourself and tell us about Monarch Tax Law and what you can do for, some of my small businesses.
Okay, well, I'm a small tax law firm. I work by myself. I used to work at a big law firm downtown Calgary, but they don't really cater to small businesses. And so I left there about 14 years ago now to start my own practice and to cater primarily to small businesses as opposed to public companies. Because those people need good tax advice as well as public companies need good tax advice. And I thought doing it by myself, I got more flexibility on how I price things and how I charge my time out and what they can get. So really, what I'm trying to do here is give you sort of big city tax advice, big city law firm tax advice at a small law firm price, if that's a way of looking at it. Yeah.
Well, and everyone appreciates that because, I guess there's overheads and there's, I guess look at myself and this is my office too. Like I don't have staff, like I don't have staff. We don't have, well, you might, but the big overhead that you normally pay downtown and parking fees and everything else, staff.
Oh yeah, I've seen stuff done downtown for $40,000 or $50,000, which I can do better and more efficiently by myself, and charge them a fraction of that, literally a fraction of that amount. And because I specialize in small businesses, there's different taxation techniques and tax law issues with small business than with public companies. And so I actually provide a better service than a lot of the big downtown firms because they're thinking public companies and they don't understand small businesses at all.
Yeah.
Yeah.
Yeah. Well, that kind of brings us to the point. Is like, what are the people listening to this are going to wonder? Well, what can George do for a small business? And I guess there's strategy and there's just everything. So I'll let you speak to that.
Well, what I see a lot of in small businesses is small business corporate structures put together without any real thought to the long-term tax consequences of that structure. And it's not their fault. They just don't have a guy like me to advise them. So you'll see small businesses put together with a holding corporation that's in totally the wrong place, or they will have assets in with the operating corporation that shouldn't be there, and they don't understand why they shouldn't be there because they don't do this kind of work all day. And so the saddest thing that happens to me, for example, is people come and call me up and say, oh, I'm just about to sell my business. I get the capital gains exemption, don't I? And as you know, that's $850,000 worth of tax-free capital gain on the sale of the shares of your business, and they're all happy that they're going to get all this tax-free money. And I look at their structure and I go, nope. But if you'd have come to me 5 years ago, not only would you get the capital gains exemption, but I could have got your wife to get the capital gains exemption and your 3 kids to get the capital gains exemption, and we could have got this whole money out tax free on this transaction. And as it is, they end up paying hundreds of thousands of dollars on tax on the sale of the business that they didn't need to spend. And you have to know how to structure your company. One of the biggest problems is the incorrect placement of a holding company. because they're told by somebody. It doesn't matter who. It could be their friend. It could be their lawyer, their regular lawyer, their corporate lawyer. Oh, you should have a holding company, and you should. And they're very good for creditor proofing purposes, because you can generally move the excess cash out of the operating corporation that's carrying on the business into the holding company tax-free, or you should be able to do that. And so they think, oh, that's great. I've got this holding company that I can move all this money out to tax-free, and then they put it in place, and then they don't understand how it's supposed to be structured. And what they don't realize, that the very best structure to get the cash out of a holding company is the very worst structure for getting the capital gains exemption. So they put something in that makes sense at one level, but doesn't make sense at another level. And it turns out that really, if you want the best of both worlds, a good holding company structure that works well for moving cash tax-free out of your holding company, and you also want to be able to access the capital gains exemption when the time comes. Really, what you need to have is a trust between the holding company and the operating company. And the typical corporate lawyer doesn't understand that. A lot of other advisors don't understand it, because they're not looking down the road, which is what I do. Is I look down the road and say, okay, what's going to happen when you die? What's going to happen if you want to sell? What's going to happen if you become ill and want to get out of the business? What's going to happen if you want to transfer the business to your kids? That's on my mind all the time. So my structures are able to put you in a position where any of those things come up, you're in the very best position possible to take advantage and to avoid some pretty onerous tax implications, which you may not have, you didn't need to worry about if you had the right structure in place.
Yeah.
So every small business person should at least talk to a guy like me and say, is my structure right? And I can tell them pretty quick whether it is or not, and then they can decide whether they want to spend the money on getting it right or not. But at least they know where they stand. And as I say, I usually my initial consultation is I don't charge for it, so I can tell somebody in a half-hour, 45-minute consultation what they need, what structure they need to have, and then at least they know where they stand. They're not just flying blind and hoping that the structure they have might work when they have no idea whether it will or won't.
Yeah. But because what we all rely on is the fact that we've got this nice corporate tax rate, nice and low inside the corporation. But then what? You spend time, people, in a salaried position pound money into their RSPs. In a corporation, they leave their money into their corporation, and what next? So that's where obviously you come in. So and I've seen your diagrams as well about some of the trust, how the trusts work. There's all the circles and squares and the rectangles and everything.
Yeah, we love to draw pictures.
Yeah. So I mean, just I guess in a rough sort of maybe verbal description, I guess we would say that the trust owns maybe the corporation, and the corporation is owned by the trust. I should let you explain that better than me.
Well, a lot of people get worried about what a trust is. They're not familiar with it. They get corporations, but they don't really understand what a trust is. And a trust is really not that complicated. There's trusts. We're surrounded by trusts all the time. If you have an RSP, that's in a trust, and you don't get worried about that. You just sort of get on with it, And when you die, all your property goes into a trust for the benefit of the beneficiaries of the will. And and the trustee is called an executor, and people don't worry about that. They just accept it. So really, the trust is a tool that we use essentially to own the shares of your operating corporation. And generally the business owner is the trustee, and the trustee controls the trust. So the business owner is in the same position as if he owned all the shares personally, but instead he's a trustee. And so he or she, I guess, but let's just say he for the sake of argument, he keeps control of the common shares of the trust, but then he has his spouse and his kids and grandkids and kids' spouses or whatever on as the beneficiaries of the trust. And he's able to share the benefit of ownership of that corporation with his family members while maintaining control of the corporation. And then what you do also then is you make the holding company, instead of owning all the shares of the trust, owning all the shares of the operating company, which would screw it up for capital gains purposes, you make the holding company a beneficiary of the trust as well, so that you can pay dividends up to the trust and over to the holding company tax-free, without messing up your ability to get the capital gains exemption down the road. So the typical structure I see is an operating corporation owned by a trust, controlled by the business owner, and then a holding corporation also owned by the trust and also controlled by the business owner. And that then allows you to maximize your intercorporate dividends tax-free, and allows you to maximize the ability to get the capital gains exemption. And if you've got your spouse and children on as your beneficiaries of the trust, they also have the capital gains exemption. So if you've got a wife and 3 kids and yourself, that's 5 capital gains exemptions. That's getting close to, that's over $4 million you could sell your business for, and not pay any tax on it at all. And I know I always joke that I have a wife and 6 kids, and people think I'm crazy. I just think it's damn good tax planning. But so you at least want to use 1 capital gains exemption. But if you can use 3 or 4 or 5 or 6, depending on how many beneficiaries they are, you can really hit a home run there. And the thing to remember about all this is not a structure that you can put in place just before you sell. Okay, you have to be proactive with this. So I mean, the very best time to put it in place is when you initially start your company. Now, most people don't do it then, because it does cost a little bit of money to do this, and if they're starting up their company, they don't necessarily have the desire or the cash to put this structure in place. But once it starts going and generating the kind of money that they thought it was going to generate, it's very worthwhile to do it as soon as you possibly can. But if you leave it too long, you may not be able to do the reorganization on a tax efficient basis in time, or it may be too late to get much of a benefit from it in time. So it really is something you need to be proactive to do, so that when the time comes and you run into my office and say, oh, I just sold my business, I get the capital gains exemption, and I can look at you and go, not only do you get the capital gains exemption, but so do 4 other people that are related to you, and we can get this out. But what I'm saying is, why not put yourself in a position that if you do have a situation where you can sell your business for a good price, you can get that price without any tax, or minimizing any tax, or saving a lot of tax. Because for every capital gains exemption that you can access, you can save well over $200,000 in tax. So 5 people, that's $1 million in tax right there, and And all it does is take, one brief phone call with a guy like me to say, what should I do with my structure? And I can tell you pretty quick and put it in place pretty quick if that's what you want. And you can see how the advantages of that. I mean, there are other advantages of trusts as well, such as some creditor proofing advantages and estate planning advantages. But really, you owe it to yourself as a small business person to have the right structure in place that gives you the maximum benefit in all these possible situations. So, I mean, that structure I was describing would be a great structure to have if you passed away. I mean, obviously we don't want to contemplate that, but it's going to happen to all of us sooner or later. Be a great structure to have if you wanted to pass your assets down to your kids on a tax efficient basis. Be a great structure to have if you sold your corporation. Be a great structure to have if you were generating piles of excess cash that you didn't want to be left in your operating corporation to be grabbed if there was an unfortunate situation and you got sued and somebody's got a judgment against you. You want to keep that out of the way of any creditors like that. So it really, it's an excellent structure to have, and if you don't have that structure like that in place, you'll ultimately find out to your loss that you should have had it in place. So that's I'm sort of on a quest to give as many people that structure as possible, because I don't want them to pay tax that's unnecessary.
Well, and people always look at cost first and say, what is it going to cost me to do this? But the big thing is, what is it going to save them in the end? And if you can save $200,000, as you're saying, per individual,
Yeah.
I think it's well worth the fees. And especially years down the road, looking back at what they have to pay you to do this, they'll gladly say, geez, that was really money well spent. Especially 10, 20 years down the road, they'll look back, everything just gets more expensive. So something that may seem like large dollars today will seem like small dollars tomorrow, especially when you look at the savings.
Yeah. I mean, I've never had a client say to me, gee, I wish I'd never spent that money, but I've had plenty of clients come back to me a few years later and say, gee, I wished I'd done what you told me to do, George.
Yeah.
And just, a few weeks ago, I had another one where the client had done what I told him to do, 8 years ago or whenever it was, he would have saved himself on that deal. He would have saved himself close to $350,000 in tax that he didn't need to spend, because he didn't think he needed it. I told him about it. He didn't think he needed it. Oh, I'll never do that. I'll never do that. It's like, okay, well, guess what? He did it. And, he never thought he'd sell his corporation, and he did. And he ended up paying a lot more tax than he otherwise would have had to.
Yeah.
So, I mean, if you want to get a scope of the idea of how much it costs to put a structure like this in place, depending on what needs to be done, the vast majority of the bills I send out for this kind of work are between $6,000 and $20,000. It's rare that it costs more than $20,000. It's usually in the 6 to 12 range, but that gives you an idea. It's not dirt cheap, but when you consider the advantages, it's when you consider the other things that you might spend $10,000 on, it's not bad.
Well, 2 family vacations back to back, you go to Disneyland twice with a large family, that's $10,000 right there,
Oh yeah. I mean, it's one of those things where everybody wants the legal fees to be $500. Well, that's not realistic. You can go to a lawyer and ask for a couple of minor things, and that's $3,000 or $4,000 right there. Where this is a complete package for in the $10,000 range. Might be a bit more, might be a bit less, but it's in that sort of range.
Well, and then there's the people that have the assets and they have the success already, and they just know that, at a certain point, like take somebody in their 50s or 60s who has a large farm, farming operation or something. I mean, there's a lot of my clients are farmers as well. And so, how would this apply to them? They might look and say, do I want to spend that much? But, can they save that? And you've got structures for farms as well, like probably similar, but
yeah, same idea. You'd use the same idea for farms, because you can get the capital gains exemption from farms, and you can get the farm rollover through a trust and all that kind of stuff. So, it's the same, different ends of the same stick basically with farms, and you've got a bit more leeway with farms because you can leave things the way they are and transfer it to your kid, and get the rollover to your kid. But are you going to transfer it to your kid? What if your kid doesn't want to be a farmer? What if somebody comes along and makes you an offer you can't refuse? Hey, I want to corner the market on dairy farms in Didsbury or something, and and I want your dairy farm, and I'm going to pay you over the odds for your dairy farm. Well, if you don't have the right structure in place, you might end up paying a lot more tax than you otherwise would have done on that transaction.
Yeah.
So it's I mean, the thing is, you never know what can happen. It's almost like an insurance policy. You put something in place in case something happens, and I can bet a lot of people are paying more than my legal fees on insurance policies over the lifetime of their business.
Mm-hmm.
So hopefully you never need an insurance policy, but
well, that's what we all hope for, but that's why we buy it, right?
Yeah, but hopefully you never need one, but we all have them, and in this one, hopefully you need it, so you may as well have it.
Well, yeah, because we want success. We want to, have a whole, big successful company that we can pass on, or, when the time comes, we don't want to pay the government a whole bunch of tax money. And if there's ways around it, just but with totally legal, I often have to explain to people that we live by the tax law. The tax act is tax law, so we don't have to pay a penny more than we owe, and they can't collect a penny more than they are entitled to collect. So, if these rules are in place and structures are in place, it's crazy not to use it.
Yeah. And the government gives you certain tax breaks for a reason. It gives you a capital gains exemption. It's not like we're manufacturing it out of nothing. We're not sort of trying to beat the system by getting our capital gains exempt on the sale of a business. There's a specific provision in the Income Tax Act that says if you follow these rules, you will get an exemption on your capital gains. Well, you may as well figure out what those rules are, and if you can't figure them out, call a guy like me up who knows them inside out, and put a structure in place that allows you to get that exemption. And it's the same with paying tax-free dividends between corporations. It's right there in the act. The scheme of the Income Tax Act allows you to do that, but there are rules around it. And if you don't follow those rules, you end up paying tax or being unable to pay those dividends out. And believe me, if you've got excess cash in your corporation, you want to get them out of there. And so you may as well have a structure that allows you to get them out of there in the most tax efficient manner possible.
That's good. This is another layer of structure. I think most of my clients know that structure is everything. They a lot of them have a lot of people have started their business just as sole proprietors. Then it's like, oh, here's this thing called a corporation. I can do that, pay less tax. The corporation, obviously, as shelters them from personal liability. They can only sue the corporation, and they have a lower tax rate. This is another level, of protection later on, where for the So that's great information.
Yeah, we're given these tools, we may as well use them. You wouldn't. If you're a farmer and somebody comes along with a really neat plow or something like that that's a little bit different from what you're used to, you wouldn't say, oh, I'm not going to use that, it's too complicated. You'd look at it and say, hey, I can get some advantages out of using this, so I think I'll buy one and learn how to use it, and start having a more efficient farm. You know, it's a tool. It's a legitimate tool. It's not hocus pocus. It's not some sort of underhanded tax trick that's going to cause all sorts of grief if the CRA finds out about it. I generally steer people away from those sort of things because, you know, unless you're worth millions and millions and the tax you're going to save is millions, why would you want to do something that's going to attract the attention of the CRA and get you into a fight? You know, this stuff isn't. This is basic, good, solid tax planning using the tools in the Income Tax Act, the way they were designed to be used. You just have to know how to use them. And if you don't, you're missing out on some advantages that you might otherwise get. So you may as well get those advantages.
Yep, we may as well just, you know, if you look at the Tax Act and look at the index under L, there's no loophole there. It's just laws. It's all laws. It's no loopholes. It's just laws.
Yeah. As I say, I mean, there's lots of tax loopholes out there that'll get you a 5-year fight with the CRA, and I don't particularly want to put you in something like that because you know, the punishment is the process. Even if you win, you lose. So you may as well use the good methods rather than the somewhat dodgy methods, and you'll probably sleep better at night and cost you less money in the long run. So
yeah, absolutely. Yeah. Well, so George, what else should we talk about here? Like we've covered a lot here, and but there's, you know, there are some things probably that you just want to make sure that people know. You know, we can look at your website as well so that people can you know, have a look and see where to reach you. So what is there anything that we missed? Well, I mean, I guess we missed, God knows it's endless, right? But
oh yeah, we could go on forever. But let me think. One of the things that I do that some lawyers are starting to get into now, but I've been doing it for 4 or 5 years, is I keep corporate minute books for clients. I keep them electronically. Most lawyers, they'll keep minute books for clients and update them every year and all that kind of stuff, but they keep the paper ones. So when the accountant wants the minute book, they got to ship the minute book out to the accountant, and the accountant's got to ship it back. And when the client wants to see it, they got to ship it to the client, and the client ships it back. And you know, it's sort of a dirty secret in the legal profession that even though we keep all these minute books, you know, we don't know where 30% of them are at any given time. And you know, because you know, take them home and leave them under the couch when we, you know, or leave them in the trunk of your car or whatever. They're easy to lose, and a lot of law firms have pretty complex systems in place to make sure they don't lose them, and it's a hassle. Whereas what I do is I just have them completely electronic, and they're virtual, and then the accountant can get access, and it's secured access. The accountant can get access whenever the accountant wants. And if you've got a lawyer that's doing a commercial transaction for you that doesn't need me involved, they can get access to the minute book, you know, without having to physically have the minute book. They can get it 24 hours a day. It's secure. It's safe, and the minute book never gets lost. And you know, you know, I have an attitude that, you know, paper minute books are so 19th century. You know, we've got the ability, and now we're in the 21st century. Don't be too 2 centuries behind the times. You know, we can have these virtual minute books that are way more efficient. I know accountants love them. I think you've used them, and they're way. It's a lot easier and way more efficient, isn't it? Than having to wait for the minute book. You can just log on and there it is, and you don't have to mess around and spend time on waiting for it and paying for couriers and all this kind of stuff.
I would agree, because you could be almost next door neighbors and just have to wait on couriers, you know, because you know, just everybody's too busy, and you could be 10 minutes away, but by the time you actually meet up, you know, by the time that day happens, it could be too late or whatever. Not too late, but just yeah, so that's brilliant. The electronic thing is beautiful. I find
Mm,
actually a lot of my clients are very electronic now. It's
yeah,
I bought a good printer and really almost never use it.
yeah, yeah.
Everything's PDF.
And then you don't lay awake at night worrying about whether you've forgotten to send a minute book back that you got 2 weeks ago and somebody's now needing or something like that. It's one of those things. It's one of those things that shouldn't be a problem, but it is unless you have these electronic minute books, which I think are I don't know why everybody isn't moving to them as fast as they possibly can. So
And that kind of brings up COVID. COVID has been kind of almost a convenience. Like it's been a complete inconvenience in so many ways. And I
yeah,
hope everybody's healthy that are listening to this. But at the same time, it's really in the data world for accounting and as you're saying as well for the legal field, it's kind of been a blessing. So how have you found that?
well, it's interesting because I've practiced out of my home for about 5 or 6 years now, and I like the commute, and I like keeping my overhead low. I know just to give you an idea, the overhead that a law firm has at a big downtown law firm is now well over $200,000 per year per lawyer. So, you know, so if you go to a big law firm in town, you've got to know that you're contributing to their overhead before they even put any money in their pockets. So there's no way they can compete with me. I mean, my overhead is negligible compared to theirs, and so I like working from home. So this COVID thing has forced so many people to work from home. And a couple of years ago, I put in a fairly sophisticated video conferencing system because I was going to do a bit of traveling, and I still wanted to keep working with my clients. And people didn't want to use it. People didn't want to know. It turned out to be a bit of a waste of money. I had to sort of send it back and cancel my contract and everything. And then COVID comes along, and all of a sudden everybody's doing Zoom meetings, and it was what I was trying to get going 2 or 3 years ago. So now you've got huge flexibility, because with the Zoom meeting, it used to be either you had to get out of your office or out of your business and spend half a day traveling and trying to find parking and going to see a lawyer and all this kind of stuff, or else I had to do that. I mean, I've done lots of house calls, especially since I work from my home. But now with COVID, everybody's gotten used to video conferencing, and we're realizing how much time it's saving. Um, I don't have to spend a whole morning going to see a client for now, and that's an expense to me to spend 2 hours extra seeing a client for now. And I mean, I will still do it, but the COVID thing has helped everybody realize that this is a viable way of communicating with each other.
I'm just gonna
Yeah.
try and muzzle that. Yeah, that's perfect.
Yeah.
CRA, by the way.
Yeah. Oh, it's the CRA. Oh, let him stew.
I'll call them back.
But people have realized that Zoom is a valid way of communicating with people, and you can have just as good a meeting over the internet as you can in person. I think once COVID's over, we'll probably go back to doing more in-person meetings, because that's the downside of COVID. You kind of get stuck in your basement all the time, and you don't get out, and you don't get to see people, and staying sane in that situation, I think, has been tough for a lot of people. Mm-hmm. But I mean, I've got clients in Red Deer and Edmonton, and and I used to say to the kids, okay, well, who wants to go to the water park in Edmonton? and they go, oh yeah. So if I went to see a client in Edmonton, I'd make a couple of days of it and take the kids to the water park, but now if I want to see a client in Edmonton, I can chat with them, and in an hour I can have the meeting done and out of the way and get on to something else, and be more productive instead of spending, a day or two for a 1 hour appointment with a client, and the same is true for them. If they want to come see me, they'd have to spend a day or two just to see me for an hour. It doesn't make any sense.
Oh yeah, a 3 hour one direction, 6 hour round trip, and potentially bad weather or anything.
Oh
like
yeah,
that.
Yeah. It's you spend an awful lot of time. I mean, and then the dilemma is, do you charge the client for that time? I generally don't, but plenty of people do, and so if I don't charge a client for a trip to Edmonton, that's a whole day when I could make $2,000 or $3,000 that I can only bill $300 or $400 for, and whereas if I do a Zoom call, I can do 5 Zoom calls in that time and be far more productive, and the end result is the same. You get to see people, and you get to talk to them and fix their problems, and work with them without having to spend forever on the road.
Yeah, and hopefully you're finding too with screen share as well that you can probably go through documents line by line and go paragraph by paragraph.
Yeah.
Yeah. People are, instead of sitting shoulder to shoulder or across the screen, or here's your copy and my copy, or everyone you can just do it right on the same screen, and then people are literally nose to their own screen, and they can see it perfectly. That's one advantage that I found too.
Yeah. Well, I keep a set of diagrams available so that I can pop them up on the screen and saying, this is a basic diagram of a structure, and they can see that. Whereas actually, when I'm in person with them, I try drawing it out, and with my scroll, they may or may not understand what I'm doing. Whereas with the diagram, they can see the diagram. It's properly typed out and everything, so it's legible, and they can keep a copy of it if they want, and more than that, they can record the entire meeting if they want, so that after they've heard me yattering on about the fun things in the Income Tax Act for an hour, they can go back and review it and try to figure out what I was actually saying.
Yeah. There's just so much. There's no end, right? Like
yeah.
You often do want to hear it again. It's like, what are we doing again?
Yeah. Because I know, one of the reasons I got into tax law is I used to be just a regular sort of general practitioner lawyer, and I'd go to these conferences on tax law for general practitioners, and some bright spark from some big downtown law firm would get up and start rattling on, and all the lawyers would be sitting there looking at each other going, what the heck is he talking about? Well, if I'd have been able to record that, I could have gone over it again and figured it out. So I'm very aware that tax lawyers tend to speak tax law and tend to assume a level of understanding that a lot of people don't have. And so I try to help people understand it. I try not to rattle on, but it's almost impossible not to say something that somebody doesn't understand. And so it helps if they can record it and go back again and listen to it.
Well, even myself, I do tax every day, and listening to the structures that you're talking about, I like to go back to it, and I'm just going to refer to you because, any additional needs that I have personally, or for my clients, I don't think I would try and replicate that myself, even being a tax guy myself.
Yeah. Well, we all know what teeth look like, but do we necessarily want to do our own dentistry? That's
yeah, exactly.
We all know what teeth do and how they work, but it sometimes takes a little extra level of expertise to understand exactly what's going on there. So
and then the deeper levels, if a problem shows up, you know, if everything went absolutely smoothly and perfectly at the first go, that'd be great, but it doesn't always. And so what do you do with the next problem, the next level, and the next level, and what's behind that too? And
Yeah, yeah.
so
And you know, and what I do is tax planning, and what you accountants tend to do is tax compliance, which is filling in the tax returns and knowing what to file and when to file it. I mean, I don't do that. When it's time for me to file my tax return, guess what? I get somebody who knows how to do it to do it.
yeah,
You know, I sort of know how to do it, but I don't do it for a living. So, you know, why would I spend my time trying to get that done when there's somebody else out there that could do it for me? And it's the same with tax planning. You know, it's not something that a lot of accountants do because they got other things that they concentrate on. Whereas for me, that's all I do, pretty much. And so, you know, I can, you know, most of my clients are actually accountants, or referred to me by accountants who know enough to know that they need to bring me in to finish off the job, basically, that the accountant can't or won't do because he's too busy doing other things.
yeah. Well, that's the biggest problem in accounting is we get too busy, and then you know, and the worst case is, you know, customer service kind of falls off. And if you try to do something different, one of the very first things I was ever told is like, do not ever try to do a Section 85 all by yourself.
Yeah, yeah.
Don't try this at home.
I mean, I can do a Section 85 in my sleep.
Yeah.
But, you know, can I do a T2S1? Well, yeah, but probably not as fast as you can.
It just, you know, becomes easy, right?
Yeah, yeah. Yeah, I mean, that's the big joke about my practice that I always have is when it comes to April, people say to me, "Oh, you're a tax guy. I bet you're really busy in April." And I say, actually, I usually take a holiday in April because all the accountants who send me the work are too busy filing tax returns in April to send me any work. So I may as well take a holiday in April because I don't file tax returns for a living, you know. And, you know, but when it comes to sometimes, you know, year end in December, sometimes I'm very busy between in the last week of December trying to get everything done for tax planning purposes that, you know, that need to be done by the end of the year, whereas accountants don't often have that pressure on them at the end of the calendar year. It's April when they go crazy.
Yep. Yeah. And the first week of January is pretty bleak. So
Yeah.
The first 2 weeks. So I think I'm going to plan a trip for next year and just go somewhere. I'll go to South America where the day is longer. At that time, it's their summer. So.
Yeah. Yeah. Yeah, well, first weeks of January are often very busy for me as well because people have stuff they want done at the end of the year, and then they want stuff they want done at the beginning of the year. And then April's not that busy, and then May, June, and July get busy, but and then October, November, December get busy for me. Those are my cycles. So it's all grist for the mill, you know. Everybody has their busy times. So.
Oh, for sure.
Yeah.
Well, okay, so if nothing else, we can come back to this as well, but I'll just do a quick screen share and show everybody your website.
Okay.
So,
okay.
You know, if you want to walk us through this as well,
Okay.
I'm just going to close a couple of things over here and just make sure that, okay, so can you see this, George?
Not yet. Oh, yeah, there it is. Yeah.
Okay. So
that's Monarch tax law. If you scroll down a little bit, you see where it says access your virtual minute book?
Yes.
If you click on there, that's how you get in to access your virtual minute book. So if I keep your minute book for you, that's how easy it is to find it. You just go in and click on there, and oh, I know what's going on. My server is getting serviced this morning, so you probably can't get on this morning.
Okay, I was just going to say that it's very slow, so I don't know if it's the internet or maybe it's the server, but
yeah, I'm having a new hard drive put in this morning actually.
oh, okay.
So And then the rest of it's just information. It probably needs updating a little bit.
As always.
My daughter was updating it. Now she's working on her PhD in something, so she's kind of busy.
Pretty impressive,
So,
I understand.
yeah. So yeah, corporate reorganizations, and yeah, some of these things need updating, but yeah.
Virtual
Yeah.
book.
So that's,
You've got some great referrals here. Oh, and you've got
yeah.
tutorials as well. That's good. Questions. This is good.
Yeah, those need updating. My daughter did those, and a couple of things have changed, so I have to update those. But a lot of people have looked at those and realized that they might need my help on some things. So
Oh, that's good. You know, the two most common things that people talk to me about are these two: the tax advice, you know,
yeah,
and the estate and trust planning. And these two, you know, just really tie together.
yeah,
Corporate rigor, I haven't had many of those.
yeah,
But you know, for me, most of the people that are probably watching this are, you know, be into the tax advice and the estate and trust planning, because,
yeah,
you know, people either have assets and it's like, how do I move these on?
yeah,
You know, and the tax advice as well. It's like, how do I, hey, if I can save $200,000 at the end, please tell me how to do that.
yeah. Well, I mean, the other thing as well is if you have a family business, a lot of times the corporate reorganization goes hand in hand with the estate planning. Because as I say, we can double up on the estate planning and the corporate reorganization. We can put a corporate structure in place that works very well from an estate planning point of view as well. So you know, you get two bangs for your buck.
Yeah. Well,
Um,
you know, and despite everything, you know, a lot of people kind of shy away from the effort, but I say to them, what percent of tax would you like to pay? I would just like to pay this percent, but would you like to pay that percent? And it's going to cost,
yeah,
you know, a little bit to do that, you know, but I think once people really think about it, you know,
yeah.
they'd be, you know, they're pretty happy to pay, you know, the much lower percent.
Well, I mean, when it comes to things like estate planning and restructuring, there's a right way to do it and a wrong way to do it. And the right way to do it is laid out in the Income Tax Act, but you know, you necessarily want to spend your life reading through this beast, figure out what the right way to do it is. I mean, that's what I do for a living. I read the Income Tax Act, and so I figured out the right way to do a lot of things. And so you may as well get a guy like me to help you to do a reorganization. I mean, one mistake a lot of people make is they say, oh, well, I want to give my kids some shares. So they've got a company worth $1 million and they've got 100 common shares in their name. And they, you know, they just subscribe for, you know, get their kids to subscribe for 50 common shares for $1. And sometimes they get away with it. But I can tell you, if the CRA ever reviews that, they might hit their kids up for a $350,000 shareholder benefit that'll cost them, I don't know, $150,000 in tax. Simple thing like that, you know, and it's amazing how many people do it, and it's amazing how many people get away with it. But do you want to be the one person who doesn't get away with it? Because it's a shareholder benefit. Section 15 of the Income Tax Act, if you really want to know. And, you know, and there's a right way of doing that. I can put your kids on and then you can sleep at night, you know?
Yeah.
Whereas if you get somebody who doesn't know what Section 15 of the Income Tax Act is about, they might do it without thinking about it. And by the time the CRA looks at it and goes, what's going on here? It's too late. And you end up with a big tax bill that you didn't need to have. You know, I think probably the best way of describing what I do is I help you to avoid big tax bills that you don't need to have, you know, because there's a right way of doing things and a wrong way of doing things. There's a right way of adding your kids as shareholders. There's a wrong way of adding your kids as shareholders, you know, and if you don't know the difference, you better ask somebody who does.
Mm-hmm.
You know, there's a right way of transferring assets to a corporation. There's a wrong way of transferring assets to a corporation. If you do it the right way, you don't pay any tax on that transfer. If you do it the wrong way, you could pay a whole bunch of tax. So do you know the right way? If you don't, you probably should ask somebody who does. You know?
Yeah.
Yeah.
And somebody who does it every day too. Like, I'd say the average everyday accountant could try it, but it's a risk. It's known as a risk even amongst sort of the accounting world that I know of. All my colleagues that I talk to as accountants every day, that nobody does Section 85. So there might be the odd one that would try it.
Yeah.
Yeah.
I can do them in my sleep because that's the world I live in, So
yeah,
may as well let me do it than lay awake at night wondering whether you've done it right yourself. So.
Oh yeah. Well,
Yeah.
and the other thing is, I've only got so much liability insurance.
Yeah. Well, I don't need it because I'm so good at this. No, that's not true. Everybody has liability insurance, but hopefully you never need it. But it's always there.
Exactly.
Yeah.
Well, so what do you think, George? I mean, okay, so everybody knows how to reach you at Monarch Tax Law, and it has your phone number here as well. So.
Yeah, my phone number in there. It's got the contact information. There's my bright smiling face. That's the number to get hold of.
Yeah.
My assistant is Gloria. You can call her if you need, and that's that's how you get a hold of me. And as I say, if I wanted to charge people for every penny of time that I spend with them, I'd still be at a big downtown firm in Calgary. My approach is there's no such thing as a dumb tax question. So if somebody's got a question, I'd rather they call me up, and if I've got the answer, I'll give it to them off the top of my head. If I don't have the answer, I probably should know it, so I'm happy to look it up and give it to them. And I really only start billing people when I have to open a file and start doing a whole bunch of stuff. And the other thing as well is if I do a structure for somebody, I build in, the ability for my clients to ask me any question about that structure for the life of that structure. I'd rather, I've got one client who asks me the same question about a structure I put in place 10 years ago. He asks me the same question every year, and I give him the same answer every year, and I'm happy to do it because I'd rather the structure work for him than for him to be scared to ask me the question that he needs to know so that he can remember how to run it, how to do it. So, if I put a structure in place, anytime you've got a question on it, I'm happy to answer it. I'm not going to send you a $200 bill every time you want to know an answer to a question. I don't want to do that to people. I make my money off putting the structure in place in the first place.
Yeah. Oh, that's great. Well, I think people will definitely appreciate that because so many lawyers, accountants as well, will charge per phone call or per whatever.
Yeah, it's I mean, if I charge $10,000 for a reorganization, I figure the client's entitled to ask any questions they want about it. That's just my philosophy on client service. So
they'll appreciate that.
Yeah.
All right.
Okay.
Well, George, hey, thanks very much for your time today. That's like, as I was saying, this is just going to go to, people in my practice, and, they'll pass it around as well. This will be passed around. So, I just, I wanted people to know what kind of additional services they could, sort of get through me to you if needed.
Yeah.
So that's great.
Yeah. Happy to help.
All right, George. Well, thanks.
Okay.
Have a great rest of the week, and we'll talk in the near future.
Sounds good. We'll see you later.
Thanks, George.
Okay. Bye-bye.